A lot of investors are fond of dividend investing, buying shares in companies that pay large cash dividends. Dividend investors are especially fond of companies that have consistently raised their dividends for more than 25 or even 50 years. The question we will discuss in this video is, how does a Dividend King generate sufficient cash flow to pay its dividend? What is a Dividend King? Dividend Kings are the rare breed of companies that have raised their dividend for more than 50 consecutive years. Obviously, the underlying assumption here is that if a company has been paying dividends for that long, they are highly likely to be paying dividends going forward. That's not an absolute certainty, but a significantly higher probability. Let's take an example of a Dividend King company, Minnesota Mining and Manufacturing, or 3M. 3M is best known for its Post-it notes and the $3 million prize in the Scott Shield Break the Glass Challenge, but actually makes 55,000 different products. 3M has paid dividends to its shareholders without interruption for 100 years and increased the annual dividend for 59 consecutive years. 3M currently, in the summer of 2017, has a dividend yield of 2.2% and has been in the Dow Jones Industrial Average Index since 1976. Over the past 5 years, 3M has steadily raised its dividend from $2.36 per share in 2012 to $4.44 in 2016 and is on track to pay $4.70 in 2017. It's time to take a look at 3M's cash flow statement. If 3M pays $4.44 in dividends per share in 2016, how much does that equate to in total? Well, with 605 million shares outstanding, the total dividends paid to shareholders are almost $2.7 billion. You find that amount as a cash outflow in the cash from financing activities section of the cash flow statement. Cash outflows are shown as negative numbers between brackets. Interestingly enough, the cash outflow from dividends is not the biggest amount in that section. The amount for cash outflow for share buybacks, reflected in the line purchases of treasury stock, far exceeds that of dividends. So that actually broadens the topic of the video too. How does a Dividend King like 3M generate sufficient cash flow to pay its dividend and buy back shares? The main answer? 3M's business activities generate $6.7 billion in 2016. This is basically the net amount of the cash inflows and cash outflows related to normal day-to-day operating activities. Customers paying 3M and 3M paying suppliers, employees and taxes. 3M makes a very healthy operating income margin as percentage of revenue of 24%, which, if you keep working capital under control, translates to a solid amount of cash coming in. I have delivered training at several large industrial multinational companies that have been aiming to get from 15% operating margin to 20%, but never got there. So 24% for 3M compares very well to peers. Not all of the cash from operating activities is available for distribution to shareholders though. 3M spends about $1.4 billion per year on CapEx, purchases of property, plant and equipment. This gets recorded in the category of the cash flow statement called cash from investing activities. If 3M acquires or divests a business unit, this also gets recorded in cash from investing activities. Two last comments on the section that we started with called cash from financing activities. 3M issued more new debt than its repayments in 2016, which is a net cash inflow, plus 3M received cash from stock options being exercised. If you add it all up, 3M's cash balance actually increased in 2016 from $1.8 billion at the start of the year to $2.4 billion at the end of the year. In short, the incoming cash from operating activities was more than sufficient to pay for capital expenditures, dividend and share buybacks. So how does a Dividend King like 3M generate sufficient cash flow to pay its dividend and buy back shares? The main answer is having a very healthy profit margin. And that's exactly what a lot of investors are looking for. High operating profit margins, high cash from operating activities and a high dividend, even if 3M's net sales have not grown over the past years. I have a lot of material available on the Finance Storyteller YouTube channel that can help you get a good understanding of the topic of cash flow and related items. For example, I have full walkthroughs for you of the cash flow statements of Shell, Tesla and Walmart. I think the best way to learn how to read the cash flow statement is to go through as many real-life examples as you can. Thank you for watching. If you enjoyed this example of how to review a cash flow statement, then please press the like button for me and share it with friends and colleagues. On this end screen, there are a few suggestions of videos you can watch next. Please subscribe to the Find a Storyteller channel, and when doing so, please hit the bell icon so you receive automatic notifications when I post new videos. Thank you!